Want to know the secret to thriving in any economy? Ray Dalio, the billionaire founder of Bridgewater Associates, shares his insights on how to navigate economic downturns and come out on top. In this video, we'll dive into Dalio's strategies for building wealth and achieving financial freedom, no matter what the economy throws your way. From the principles of diversification to the importance of having a long-term perspective, we'll cover it all. So, if you're ready to weather any economy and achieve financial success, then keep watching. Join me as I dive into Dalio's secret strategies and see if I can apply them to weather any economy that comes my way. Ray Dalio is a name you might know well, especially if you're interested in investing and managing wealth. As the founder of Bridgewater Associates, one of the largest hedge funds in the world, Dalio has built a reputation for his unique approach to navigating economic cycles. He's also the author of the best-selling book, Principles, which shares his philosophies on life, work, and decision-making. What I find fascinating about Dalio is that he's not afraid to challenge conventional thinking and has developed a set of principles that have helped him thrive in even the most turbulent markets. When economic uncertainty hits, individuals and businesses alike are often left feeling anxious and uncertain. The fear of job losses, declining investments, and reduced consumer spending can be overwhelming. Many of us have experienced financial downturns, and it's natural to wonder if we'll be able to weather the storm. In times like these, it's easy to get caught up in the emotional rollercoaster and make impulsive decisions that can have long-term consequences. Unfortunately, this is exactly when we need to be the most calm and rational. The problem is that our emotions often get the better of us, leading to poor decision-making and a lack of clarity on what to do next. This is precisely why having a solid understanding of economic cycles and risk management strategies is crucial. Without it, we're left feeling like we're at the mercy of the markets. As I'll discuss later, Dalio's principles offer a refreshing alternative to this approach. Economic downturns often have a ripple effect, impacting various aspects of our lives. From reduced consumer spending to widespread job losses, the consequences can be far-reaching. In times like these, it's essential to have a clear understanding of our financial situation and be proactive in our decision-making. Unfortunately, many of us don't have a solid grasp of personal finance or investing, which can make it difficult to navigate turbulent markets. This lack of knowledge can lead to a sense of powerlessness, making it even harder to make informed decisions. Furthermore, the fear of uncertainty can cause us to make impulsive decisions, which can have long-term consequences. By understanding economic cycles and developing a solid risk management strategy, we can begin to break free from this cycle of fear and uncertainty. In times of economic uncertainty, it's natural to feel overwhelmed and unsure of what to do next. This is precisely why having a clear understanding of Dalio's principles can be so powerful. By understanding economic cycles and developing a solid risk management strategy, we can begin to take control of our financial situation and make informed decisions. As I'll discuss later, Dalio's principles offer a refreshing alternative to the conventional approach to investing and managing wealth. Dalio's principles are rooted in the idea of diversification, understanding economic cycles, and risk management strategies. He believes that by spreading investments across different asset classes and understanding the different stages of economic cycles, we can reduce our exposure to risk and increase our chances of success. Dalio also emphasizes the importance of understanding our own psychology and how it impacts our decision-making. By recognizing our own biases and emotional triggers, we can begin to make more rational decisions, even in the most turbulent markets. At the heart of Dalio's approach is the concept of radical transparency. This involves being brutally honest with ourselves and others about our strengths, weaknesses, and biases. By recognizing our own limitations and vulnerabilities, we can begin to make more informed decisions and develop a more realistic understanding of the markets. This approach also involves being open to feedback and criticism, which can be difficult for many of us. However, by embracing radical transparency, we can begin to break free from our own biases and emotional triggers, leading to more rational decision-making. Dalio's principles also emphasize the importance of understanding economic cycles and how they impact our investments. By recognizing the different stages of economic cycles, from growth to decline, we can begin to adjust our investment strategy accordingly. This involves being aware of the warning signs of an impending downturn and taking proactive steps to mitigate our risk. By understanding economic cycles, we can begin to make more informed decisions and reduce our exposure to risk. One of Dalios' key insights is his concept of the holy grail of investing, which involves achieving a balance between return and risk. This involves finding investments that offer a high potential for return while minimizing exposure to risk. Dalio believes that this can be achieved by diversifying across different asset classes and understanding the different stages of economic cycles. By recognizing the warning signs of an impending downturn, we can begin to adjust our investment strategy accordingly, reducing our exposure to risk. This approach has been instrumental in Dalio's success, allowing him to navigate even the most turbulent markets with ease. Dalio's key insight is his ability to see the big picture and understand the interconnectedness of the markets. He believes that by recognizing the patterns and trends that shape the markets, we can begin to make more informed decisions. This involves taking a step back and looking at the markets from a macro perspective, rather than getting bogged down in the details. By doing so, we can begin to identify opportunities and threats that might not be immediately apparent. This approach has been instrumental in Dalio's success, allowing him to stay one step ahead of the markets. Dalio's strategy has been put to the test time and time again, and the results are nothing short of remarkable. From navigating the 2008 financial crisis to weathering the COVID-19 pandemic, Dalio's approach has consistently delivered strong returns, even in the most turbulent markets. This is precisely why his principles have become so influential, inspiring a new generation of investors and entrepreneurs. Dalio's principles offer a refreshing alternative to the conventional approach to investing and managing wealth. By understanding economic cycles, diversifying across different asset classes, and recognizing our own biases and emotional triggers, we can begin to take control of our financial situation and make informed decisions. Dalio's approach has been battle-tested and has consistently delivered strong returns, even in the most turbulent markets. One of his core beliefs is principles-based decision-making. Dalio documents insights and refines them over time, ensuring an objective and repeatable decision-making process even during uncertainty. His famous all-weather portfolio is designed to perform well in any economic environment. This strategy emphasizes diversification, risk parity, and hedging against inflation and deflation by holding a mix of stocks, bonds, gold, and commodities. Dalio deeply studies economic cycles, particularly long-term debt cycles, short-term business cycles, and inflation trends. He pays close attention to debt levels, central bank policies, and geopolitical shifts, helping him anticipate major economic movements. Adaptability is another key component of his success. He embraces radical open-mindedness by seeking opposing viewpoints and challenging his own beliefs to avoid blind spots in decision-making. To protect wealth during market uncertainty, Dalio recommends investing in safe haven assets such as gold, inflation-protected bonds, and international holdings. He also believes that history provides valuable lessons, analyzing past economic crises to prepare for future downturns. Long-term wealth creation, in Dalio's view, depends on productivity growth rather than short-term speculation. He advises investing in countries and companies that drive innovation and economic development. Thanks for watching, and I'd love to hear your thoughts on Dalio's methods in the comments below. If you're interested in learning more about economic strategies, be sure to check out our next video, where we'll be diving into another influential thinker's approach to navigating the markets.